Dan Ives just made a bold statement saying that big tech is spending $1 trillion on AI for a reason. In a recent CNBC closing bell interview, the Wedbush tech analyst shared his latest thoughts on Microsoft, Alphabet, the AI revolution, and why he believes we're still in the early stages of one of the biggest technology booms in history. First, I'll play you the interview clip uninterrupted. Then I'll break down exactly what Dan Ives is saying, share my own reaction and analysis, and finally reveal 3 high-growth tech stocks that could benefit the most from this massive AI spending wave. Let's hear what Dan Ives had to say.
We're now joined by star analyst Wedbush's Dan Ives. Dan, great to see you as always.
Great to be here.
All right, so Dan, I just kind of mentioned Microsoft, biggest drag on the S&P. Obviously, the S&P's higher, but it's one of the reasons why it's not higher as high as it could be, I should say. You have a very bullish price target on Microsoft, 575, a more than 25% upside. What do you make of the announcements out that conference today? Does it change your view on the stock long term at all?
Yeah, Frank, I mean, look, they're defending their turf. They're going after developers, and that's really front and center in this arms race that we're seeing play out. And I think these are the important steps, not just on Copilot and Build, but what ultimately will be Azure. And that's why I think right now the market is mispricing Microsoft to what I believe is still going to be the monetization phase that's going to happen next 6-12 months. We like everything we're seeing here at the developer conference.
All right, like everything you're seeing, I want to just very briefly, very quickly touch on that quantum news. Is that something that, because we're going to talk about cybersecurity in a minute, a lot of people see quantum as basically something that could really hurt the cyber sector. Is this quantum news significant? We see a lot of surges in the stocks from time to time, but the news out of the developer conference today.
It's a step out of look at IBM's playbook with Arvin, right? I mean, you want to see more exposure to quantum, given where Microsoft plays. And look, it's our view, that's a derivative of the fourth industrial revolution that we're seeing. And not just what we're seeing from the government side, but this is one where you want to see Microsoft dive into the deep end of the pool. And I think this is just more and more what we're going to see from big tech as we're continuing to see innovation expand. And I think it's accelerating a lot quicker than anyone would have expected, even though quantum's obviously been focused on some smaller companies that have now become pretty large.
All right, also want to hit on Alphabet. Your price target there at 370, just about 1% or 2% upside in your view. What do you make of this $80 billion equity sale that they're doing and the fact that it's going to be in tranches?
Look, I think that's a smart way to do it. And obviously, you see Berkshire as another, sort of backer of it. Look, we're talking about $1 trillion that's going to be spent in big tech next year in terms of CapEx. So, this is going to be, if you look at how tech companies are doing this, partial debt, partial stock sales, I actually think the market's shrugging this off pretty well relative. I think it just shows right now, you go back a year ago, New York City cab drivers bearish on Alphabet. Look today. I mean, they are in a phenomenal position, when it comes on the cloud side, when it comes to Gemini. And I think it's a smart time to do this. You want to see them go on the offensive, not defensive.
All right, so your point about the timing. Earlier, we heard from David Solomon or Leslie Picker doing a great interview. He's saying right now there's more greed than there is fear in the market. So actually, I emailed with Alphabet. They say the $40 billion of this is going to start after July 1st. As opposed to right now. I mean, are you concerned that maybe sentiment could change? Solomon also talked about the lens that people are viewing these AI investments. That could potentially change. I know it's only a month. I know everybody's bullish. But these days, a month seems like a very long time. Are you concerned at all that sentiment may change when it comes to the AI trade and the AI build out over that time?
Look, and I get, obviously some of the concerns out there, but it's my view we're still a third inning of the AI revolution, right, relative to where this 9-inning game's going. And, we could definitely have sort of ebbs and flows in this market. But when you look where Alphabet's position, I mean, they're kind of front and center. I mean, they're top of the mountain right now. Amazon clearly has made up, sort of narrowed the gap. Microsoft, I think, obviously is doing a lot of great things in terms of Azure. But look, Alphabet can't think about weeks or months. We're talking about years. We're talking about fourth industrial revolution in terms of what they're going after.
One of the biggest topics discussed was Microsoft and the company's latest developer conference announcements. Dan's reaction was overwhelmingly positive. He argued that Microsoft is doing exactly what it needs to do to maintain its leadership position in artificial intelligence. According to him, the company is aggressively defending its territory while simultaneously expanding its influence among software developers. That point about developers is incredibly important and often gets overlooked by everyday investors. AI is not just about flashy consumer products. The real battle is taking place behind the scenes. Whoever wins the hearts and minds of developers will likely control a massive portion of the AI ecosystem over the next decade. Developers build applications, businesses, and entire platforms. If Microsoft becomes their preferred AI partner, the company gains a powerful advantage that extends far beyond simple software subscriptions. Dan specifically highlighted Microsoft's efforts around Copilot and Azure. In his view, the market still does not fully appreciate how much revenue these products could eventually generate. He believes Microsoft is approaching what he calls the monetization phase of AI, where all the investments and infrastructure spending begin translating into meaningful financial returns. I actually think this is one of the strongest parts of the Microsoft bull case. Over the last few years, investors have watched technology companies spend staggering amounts of money on AI infrastructure. The natural question has always been, when do we start seeing the payoff? Dan's answer appears to be that the payoff is getting closer, perhaps within the next 6 to 12 months. What is interesting is that Microsoft stock has already performed extremely well over the last several years, yet Dan still sees substantial upside. His price target suggests that he believes Wall Street is underestimating the company's future earnings power. That is a bold statement considering Microsoft is already one of the most valuable companies in the world. The discussion then shifted toward quantum computing, which is another area generating enormous excitement among investors. Dan viewed Microsoft's latest quantum developments as a positive step, but what caught my attention was his broader perspective. Rather than treating quantum computing as a separate story, he sees it as part of a much larger technological transformation. He referred to it as a derivative of the Fourth Industrial Revolution. In other words, artificial intelligence, quantum computing, cloud computing, automation, and other advanced technologies are all interconnected pieces of a much bigger puzzle. Dan pointed to IBM as an example of how large technology companies are increasingly embracing quantum initiatives. He essentially argued that investors should want Microsoft to become even more aggressive in this area. His reasoning is fairly straightforward. If quantum computing ultimately becomes commercially viable, the companies that establish leadership positions early could gain enormous advantages. Personally, I think this is an area where investors need to balance excitement with patience. Quantum computing has incredible long-term potential, but the commercial applications are still developing. There is a tendency in the market to get carried away every time a new quantum breakthrough is announced. While the technology is fascinating, I believe AI remains the much bigger revenue driver for the foreseeable future. That said, Dan's broader point is difficult to ignore. Innovation appears to be accelerating across multiple fronts simultaneously. Just a few years ago, many of these breakthroughs seemed decades away. Today, they are becoming increasingly tangible. The conversation then moved to Alphabet, and this was another fascinating segment because it highlighted how dramatically investor sentiment has changed. Dan was asked about Alphabet's massive $80 billion equity sale and financing strategy. Instead of viewing it as a warning sign, he interpreted it as evidence of strength. His argument was that large technology companies are preparing for an unprecedented wave of capital spending. He referenced projections suggesting that big technology firms could collectively spend around $1 trillion on capital expenditures next year. That number is almost hard to comprehend. Think about what that means for a moment. These companies are building data centers at historic rates. They are purchasing AI chips by the millions. They are expanding cloud infrastructure globally. They are investing in software, networking equipment, power systems, and next-generation computing platforms. Dan sees Alphabet's financing decisions as a smart way to support those investments. Rather than being defensive, he believes the company is positioning itself to remain aggressive. One of the most memorable comments from the interview came when he contrasted current investor sentiment with where things stood roughly a year ago. He joked that even New York City cab drivers were bearish on Alphabet back then. Today, the narrative has completely flipped. That observation highlights one of the most fascinating aspects of investing. Sentiment can change dramatically in a relatively short period of time. Just 12 months ago, many investors worried that Google was falling behind in AI. There were concerns that competitors might permanently damage the company's search dominance. Fast forward to today, and Alphabet is widely viewed as one of the major beneficiaries of the AI revolution. Dan specifically pointed to Google's cloud business and its Gemini AI platform as reasons for optimism. In his view, Alphabet is no longer playing catch-up. It is firmly positioned among the industry's leaders. I think there is a valuable lesson here for investors. Markets often overreact in both directions. When fear dominates, even exceptional companies can become unpopular. When confidence returns, those same companies can suddenly become market favorites again. The final portion of the interview focused on perhaps the most important question facing investors right now. Can AI enthusiasm continue? The interviewer referenced comments from Goldman Sachs CEO David Solomon, who suggested that there is currently more greed than fear in the market. That observation raises a legitimate concern. If investor optimism becomes excessive, valuations can eventually disconnect from reality. The question was essentially whether sentiment could shift over the coming months, especially as companies continue pouring enormous amounts of money into AI projects. Dan acknowledged that market volatility is always possible. He did not dismiss the idea of temporary pullbacks or changing sentiment. However, he remained firmly convinced that the bigger story is still in its early stages. This is where he introduced one of his favorite analogies. He described the AI revolution as being in only the third inning of a 9-inning game. That comparison tells you everything you need to know about his outlook. If he is correct, then what investors have witnessed so far may represent only a fraction of the eventual opportunity. The massive gains, infrastructure build-out, and revenue growth associated with AI could still have many years ahead. Personally, I find this argument compelling, although I would add an important caveat. Being early in a technological revolution does not necessarily mean stock prices move in straight lines. History shows that transformative technologies often experience periods of intense excitement followed by corrections, skepticism, and renewed growth. We saw it during the internet boom. We saw it with cloud computing. We saw it with smartphones. Revolutionary technologies can create enormous wealth, but the journey is rarely smooth. What I think Dan is really saying is that investors should focus on the long-term trajectory rather than getting distracted by short-term market noise. He believes companies like Microsoft, Alphabet, Amazon, and other major AI leaders are building the foundation for the next era of technology. The investments happening today are laying the groundwork for future earnings growth that may not yet be fully reflected in stock prices. By the end of the interview, the overarching message was remarkably clear. Dan Ives sees artificial intelligence as the defining investment theme of this generation. He believes Microsoft remains undervalued relative to its future AI monetization opportunities. He views Alphabet as a company that has successfully positioned itself near the center of the AI ecosystem. He sees quantum computing as an important complementary technology that could further accelerate innovation. And perhaps most importantly, he believes the AI story is still in its early chapters. Whether you agree with every aspect of his outlook or not, one thing is undeniable. The largest technology companies in the world are committing unprecedented amounts of capital to artificial intelligence. They are not acting like executives who believe this trend is temporary. They are acting like leaders who think AI will reshape the global economy for decades to come. And if Dan Ives is right, the biggest winners of this technological transformation may still be ahead of us, not behind us. Now let's dive in and break down the 3 high-growth technology stocks that could be positioned to benefit from some of the biggest trends shaping the future of the market. The first company on our list is Palantir Technologies, ticker symbol PLTR. When most people hear the term artificial intelligence, they immediately think about chatbots, image generators, or consumer applications. But some of the most valuable AI opportunities are happening behind the scenes, helping organizations make better decisions using enormous amounts of data. That is exactly where Palantir has built its business. Palantir develops software platforms that help organizations integrate, analyze, and act on massive amounts of information. The company originally became known for its work with government agencies and defense organizations, but over the last several years, it has successfully expanded into the commercial sector. What makes Palantir particularly interesting is that it sits at the intersection of several major trends. Artificial intelligence is becoming more important. Data volumes continue growing exponentially. Organizations are looking for ways to improve efficiency, and governments around the world are investing heavily in technology solutions that can improve operations and decision-making. Palantir's software is designed to address all of these challenges. Instead of simply collecting data, Palantir helps customers turn data into actionable intelligence. That capability can be incredibly valuable when organizations are dealing with millions of variables and complex operational environments. One of the company's biggest competitive advantages is that its software becomes deeply integrated into customer workflows. Once an organization adopts Palantir's platforms and builds critical processes around them, switching to a competitor can become difficult and expensive. That creates a powerful moat. The company's revenue comes primarily from 2 segments. Its government business generated approximately $2.4 billion in revenue, while its commercial segment generated roughly $2.07 billion. Having exposure to both public and private sector customers gives Palantir multiple avenues for growth. What's particularly impressive is how quickly the business has been growing. According to recent data, Palantir delivered earnings growth of more than 250% over the past year, significantly outperforming the broader software industry. Revenue growth remains strong as demand for AI-driven solutions continues increasing across multiple sectors. The company has also continued winning major contracts that reinforce its strategic importance. One notable example is a large agreement with the United States Department of Agriculture designed to enhance security and operational efficiency. Deals like these demonstrate that Palantir's technology is increasingly being viewed as mission-critical rather than optional. Another reason investors continue paying close attention to Palantir is its commitment to innovation. The company spends heavily on research and development because management understands that technological leadership cannot be taken for granted. Artificial intelligence is evolving rapidly, and companies that stop innovating risk becoming obsolete. Palantir appears determined to stay ahead of that curve. One thing I personally find interesting about Palantir is that it is no longer simply a government contractor. For years, critics argued that the company depended too heavily on government spending. While government contracts remain important, the commercial side of the business has expanded significantly and continues gaining momentum. That diversification could prove extremely valuable over the long run. At the same time, investors should recognize that Palantir is not a risk-free investment. The stock has often traded at premium valuations because the market expects substantial future growth. Whenever expectations become very high, the company faces pressure to consistently deliver exceptional results. That means execution matters. Fortunately for shareholders, recent performance suggests management has been doing exactly that. Growth remains strong, profitability has improved, and demand for AI-related software solutions continues accelerating. Looking ahead, one of the biggest catalysts could be the broader adoption of artificial intelligence across both government agencies and commercial enterprises. Many organizations understand that AI has enormous potential, but they often struggle to integrate these technologies effectively into real-world operations. Palantir's platforms help bridge that gap by combining AI capabilities with data management and operational decision-making. If AI adoption continues expanding over the next decade, Palantir could find itself in an increasingly favorable position. Another factor worth considering is the company's role in national security and defense-related applications. Governments around the world are investing heavily in advanced technology capabilities, and Palantir has already established itself as a trusted provider in this space. That creates opportunities that many competitors simply cannot replicate. The long-term investment thesis ultimately comes down to a simple question. As organizations generate more data and rely more heavily on artificial intelligence, which companies are best positioned to help them make sense of it all? Palantir believes it has the answer. The company's combination of advanced software, deep customer relationships, strong government presence, growing commercial adoption, and continued investment in innovation makes it one of the most closely watched growth stories in the technology sector today. Whether you're bullish or cautious on the stock, it's difficult to deny that Palantir has become one of the most important players in the rapidly expanding AI ecosystem. And if management continues executing at a high level while maintaining strong growth, the company could remain a major beneficiary of the AI revolution for years to come. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The second stock on our list is Western Digital, ticker symbol WDC. At first glance, Western Digital may not seem as exciting as some of the company's dominating artificial intelligence headlines. It does not build flashy AI applications. It does not operate a social media platform, and it is not a software company selling subscriptions to enterprises. But here's what many investors overlook. The AI revolution cannot exist without massive amounts of data storage. Every AI model, every cloud platform, every enterprise application, and every digital service depends on storing, managing, and accessing enormous quantities of information. As AI systems become more powerful, the amount of data they consume and generate grows dramatically. That creates a massive opportunity for companies operating at the heart of digital infrastructure. And that is exactly where Western Digital comes in. Western Digital is one of the world's leading providers of data storage solutions. The company develops and manufactures hard disk drives, solid-state drives, flash memory products, and storage systems that help organizations and consumers manage growing volumes of data. The importance of this business becomes clearer when you consider what is happening globally. Artificial intelligence is driving unprecedented demand for data centers. cloud computing continues expanding, streaming services generate enormous amounts of content, businesses are collecting more operational data than ever before, governments are digitizing records and services, and consumers continue creating vast amounts of digital content every day. All of that information needs to be stored somewhere. Western Digital sits directly in the path of that secular growth trend. One of the reasons the company attracted attention as a high-growth opportunity is the dramatic improvement in its financial performance. Over the past year, Western Digital delivered earnings growth exceeding 900%, a remarkable turnaround that reflects both improving industry conditions and stronger execution by management. That level of earnings acceleration is not something investors see every day. Revenue has also benefited from recovering demand in storage markets after a period of weakness that affected much of the semiconductor and hardware industry. What's particularly interesting is that Western Digital appears positioned to benefit from multiple growth drivers simultaneously. First, artificial intelligence workloads require enormous storage capacity. Training advanced AI models involves processing vast datasets that can reach into the petabytes. Companies building AI infrastructure need reliable and scalable storage solutions capable of handling those requirements. Second, enterprise customers continue modernizing their technology environments. Many organizations are upgrading legacy systems and increasing investments in cloud and hybrid infrastructure. These upgrades often require additional storage capacity and more sophisticated data management solutions. Third, data creation itself shows no signs of slowing down. Every year, the amount of information generated globally continues expanding. Whether it comes from businesses, consumers, connected devices, or AI systems, that growth creates ongoing demand for storage technologies. One aspect of Western Digital's business that I find particularly compelling is its exposure to a necessity rather than a luxury. Companies can postpone certain technology purchases during economic uncertainty. They can delay software upgrades. They can reduce discretionary spending. But data still needs to be stored. In many cases, organizations have no choice but to continue investing in storage infrastructure because their operations depend on it. That creates a level of resilience that investors sometimes underestimate. Another positive development involves the company's strategic focus. Western Digital has been working to streamline operations and improve efficiency while positioning itself to capitalize on favorable long-term industry trends. Management understands that storage technology remains a critical component of the modern digital economy. As demand increases, companies with scale, manufacturing expertise, customer relationships, and technological capabilities could be in an advantageous position. The financial markets appear to be recognizing that potential. Investors have become increasingly interested in infrastructure plays that support the AI ecosystem. While much of the attention focuses on companies directly developing AI applications, the supporting infrastructure providers often benefit as well. In some cases, they may even benefit regardless of which AI platform ultimately wins. Think about it this way. If AI adoption accelerates, data storage demand rises. If cloud computing expands, storage demand rises. If businesses generate more information, storage demand rises. If digital transformation continues, storage demand rises. Western Digital does not necessarily need to predict which AI model becomes dominant or which application gains the largest market share. It simply needs the overall digital economy to keep producing more data. And based on current trends, that appears highly likely. Of course, investors should also understand the risks. The storage industry can be cyclical. Pricing conditions fluctuate. Demand patterns change over time. Competition remains intense. And hardware businesses generally face different challenges than software companies. These realities can create volatility in both earnings and stock performance. However, periods of volatility sometimes create opportunities for long-term investors who focus on business fundamentals rather than short-term market sentiment. What makes Western Digital particularly interesting today is the combination of strong earnings growth, improving industry conditions, and favorable secular trends tied to AI and data infrastructure. When you put those factors together, the investment case becomes easier to understand. The world is producing more data. Artificial intelligence is accelerating that trend. Organizations need reliable ways to store and access information. Western Digital provides the infrastructure that makes that possible. I also think many investors make the mistake of viewing AI exclusively through the lens of software companies. The reality is that every major technological transformation creates winners throughout the entire value chain. Some companies build the applications, some provide the computing power, some supply networking equipment, and others provide the storage solutions necessary to support everything else. Western Digital occupies that last category. It may not always generate the same headlines as some of the market's most popular AI stocks, but that does not make its role any less important. In fact, one could argue that data storage becomes more valuable as artificial intelligence continues expanding. After all, AI systems are only as useful as the data they can access and process. As we look toward the next several years, demand for digital storage appears likely to remain strong. Organizations across industries continue investing in data infrastructure. Cloud adoption remains a powerful tailwind. Artificial intelligence is creating entirely new categories of demand, and data growth continues at a remarkable pace. Those trends provide a favorable backdrop for companies like Western Digital. For investors seeking exposure to the infrastructure side of the technology sector rather than purely software-focused opportunities, Western Digital offers a unique way to participate in some of the most important technological trends shaping the future. And if management continues executing effectively while benefiting from growing demand across storage markets, the company's growth story may still have significant room to run. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. The third and final stock on our list is Reddit, ticker symbol RDDT. When many investors think about social media companies, they often focus on user growth, advertising revenue, and engagement metrics. While those factors certainly matter, Reddit's story is becoming much bigger than social media alone. In many ways, Reddit has evolved into one of the most valuable collections of human-generated information on the internet. Every day, millions of people visit the platform to ask questions, share experiences, solve problems, discuss hobbies, review products, and exchange ideas. Over the years, this has created an enormous archive of authentic conversations covering virtually every topic imaginable. That unique asset is becoming increasingly valuable in the age of artificial intelligence. Unlike content that is generated by companies or publishers, Reddit's content comes directly from real users discussing real experiences. That gives the platform something many competitors struggle to replicate: authenticity. And as artificial intelligence models seek access to high-quality training data, authentic human conversations have become a valuable resource. This is one of the reasons investors have become increasingly interested in Reddit's long-term potential. The company is no longer just an online discussion platform. It is becoming a data, advertising, and community-driven business with multiple avenues for growth. One of the most encouraging developments has been Reddit's strong financial performance. The company has delivered impressive revenue growth as advertising demand continues improving and user engagement remains strong. According to the analysis highlighted in the article, Reddit generated earnings growth of more than 300% over the past year, placing it among the stronger growth stories in the technology sector. Those numbers help explain why investors have become more optimistic about the company's future. But revenue growth alone is not what makes Reddit interesting. What makes Reddit unique is the strength of its communities. Unlike many social platforms that focus primarily on influencers or content creators, Reddit revolves around interest-based communities where users actively participate in discussions. Whether someone is interested in investing, technology, gaming, sports, travel, health, or countless other topics, there is usually a dedicated community built around that interest. This creates a level of engagement that can be difficult for competitors to replicate. Users often come to Reddit with a specific purpose. They are looking for answers, opinions, recommendations, or expertise from people who share similar interests. That intentional engagement can be extremely valuable to advertisers. When someone actively researches a topic, they are often closer to making a purchasing decision than someone casually scrolling through entertainment content. As a result, Reddit has opportunities to improve advertising monetization while maintaining the community-focused experience that attracts users in the first place. Another important growth driver involves search visibility. For years, people searching for information online have frequently added the word Reddit to their searches because they wanted authentic answers from real people rather than generic content. That behavior has helped Reddit become a destination for information discovery. As artificial intelligence continues changing how people search for information, Reddit's vast database of discussions could become even more valuable. The company has already begun exploring opportunities related to data licensing and partnerships that leverage its unique content assets. Personally, I think this is one of the most overlooked aspects of the investment story. Many investors still view Reddit as simply another social media company, but when you examine the business more closely, it becomes clear that its value proposition extends far beyond advertising. The platform possesses years of human knowledge, opinions, experiences, recommendations, and discussions that cannot easily be recreated. That type of asset becomes increasingly important in a world driven by data and artificial intelligence. Of course, Reddit still faces challenges. Like any platform that relies on user-generated content, it must balance growth, monetization, moderation, and user experience. If management pushes too aggressively on advertising, users may become frustrated. If content quality declines, engagement could suffer, and competition for online attention remains intense. These are legitimate risks that investors should consider. However, management appears focused on expanding revenue opportunities while preserving the qualities that make Reddit unique. That balance will be critical moving forward. Another reason I find Reddit compelling is its potential operating leverage. As revenue grows, the company has opportunities to improve profitability because many of its costs do not necessarily increase at the same pace as revenue. This creates the possibility that earnings could grow faster than sales over time if management continues executing effectively. Investors often look for businesses with that type of scalability because it can lead to substantial value creation over the long run. Looking ahead, several catalysts could support future growth. Continued user growth would provide a larger audience for advertisers. Improved advertising tools could increase monetization. Additional data licensing agreements could create new revenue streams. An ongoing expansion of the platform's ecosystem could strengthen engagement even further. Taken together, these opportunities suggest that Reddit's growth story may still be in its early stages. What I find particularly interesting is how different Reddit is from the other companies discussed in this video. Palantir helps organizations make sense of data. Western Digital helps store that data, and Reddit generates enormous amounts of valuable human-generated information every single day. Each company benefits from powerful long-term trends, but they participate in those trends from very different angles. That diversity is one reason these stocks continue attracting attention from growth-oriented investors. When evaluating high-growth opportunities, I often look for businesses that possess unique assets or competitive advantages that competitors cannot easily duplicate. Palantir has deep software integration and government relationships. Western Digital has critical storage infrastructure and manufacturing expertise. Reddit has communities and user-generated content built over decades. Those advantages help explain why each company has earned a place on this list. Now, does that mean these stocks will move straight up from here? Of course not. Every stock experiences volatility, market sentiment changes, economic conditions fluctuate, and even great businesses face unexpected challenges. But long-term investing is not about predicting what happens next week or next month. It is about identifying companies that could be significantly larger and more valuable years from now. That is what makes these three businesses worth watching. Each operates in an area benefiting from major secular trends. Each has demonstrated strong growth, and each possesses characteristics that could support continued expansion over the long run. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I'd like to hear from you. Which of these three companies do you believe has the strongest long-term competitive advantage? Palantir's position in artificial intelligence and government software, Western Digital's role in data storage infrastructure, or Reddit's unique collection of user-generated communities and content? Let me know your thoughts in the comments below. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.